The candlestick signals show that the Dow is not changing investor sentiment. The slow uptrend remains in progress. Even though there's selling days, it's always followed by confirmation of bullish trading following right behind. Makes trend analysis very simple when you use candlestick signals and a simple rule that as long as they aren't closing below the T-line, this black 8 exponential moving average, the probabilities remain very strong that you're staying in an uptrend. Having the visual ability to analyze what other technical indicators or technical analysts use as indicators. For example, as long as the transportation index remains positive, the rest of the market will remain positive. When we can see that there isn't any real massive sell signals occurring in the transportation index, that pretty much alludes to the other indexes still will follow suit and continue its uptrends. And knowing that there isn't any change of investor sentiment allows big patterns like fry pan bottom breakouts. Notice where this one broke out, a nice gap up through this level, right where the fry pan bottom pattern started its indecisive trading. This puts us in situations where we can remain in very strong profitable positions with other simple technical analysis, which is we stay long as we don't see a candlestick sell signal and a close back below the T-line. This analysis works on stocks, commodities, currencies, tulip bulbs, anything that has fear and greed. Notice the live cattle chart. J-hook pattern. Perfect place to be buying right in here. A J-hook pattern. There's the kicker signal, one of the strongest reversal signals. Ticking the next wave up for another J-hook pattern, which means the potential is, first of all, moving back up to the recent high, making for a profitable trade. And if it breaks that level, we could have another price move of the same magnitude. There's nothing difficult about candlestick analysis. It's merely the graphic depiction of what is occurring in investor sentiment that has occurred year after year, decade after decade, century after century. And the Japanese rice traders not only gave us the benefit of seeing what the patterns look like, they could also tell us what the investor psychology was that created that pattern, so we have a very powerful grip of why a price will move when it does. That'll be it. We'll see you in the chat rooms.